Hey guys, what's up my people, and welcome back of course to Ziwa FX TV show. Okay, so in today's video I'm really sorry. I'm so like I most times don't get time to make real videos, but because I had so many requests about me to make a video of CAD JPY, I want to show you. Mainly this video is mainly for learning purposes. You understand why I took the entry, so that next time you might not miss what I can show you here. Okay, so if you're new to this channel, don't forget to subscribe, hit the notification bell so don't miss most of my videos. And don't forget that this video is being sponsored by Xness. Hey man, check the description, click that link and open yourself a trading account. Don't forget to also click the link and join my group. If you need more help, you'll get my WhatsApp number and of course the Telegram group. Okay, now let me show you something real quick guys. So I want you to look at CAD JPY here, but before it, because people have been asking me, what did you draw here, Miles? What did you draw? Because this was my analysis that I sent to people. And people are kind of confused of this thing, almost like a cylindrical triangle, and I'm going to explain to you everything that you understand. Okay, now if you look at this is a very important setup, and I'm going to break this setup from small time frames to big time frames. Okay, yesterday it made a small drop, and today it has still made a bigger drop. You can see this. Okay, now I want you to understand one thing, that if you're new to this channel, don't forget, leave a comment guys and leave a like. Let me see what you think about this video. Now the first thing that you have to do is, I told you guys, when you're analyzing the market, start from high time frames. So come to monthly chart. I want you to come to monthly chart and look at monthly chart. What do you see in the monthly chart? What do you see in the monthly chart? We have a double peak. A double peak formation. When you see a double peak formation in monthly chart, it's very important guys. So let me mark the double peak formation. I mark the double peak formation like that. Okay, now what I've done so much here is I've marked the double peak formation in the monthly chart. So what is very important in the double peak formation in the monthly chart, one thing can happen. This peak can either be a resistance point for price to come back, or it can also turn up to be a support point. Now what is a support point? Let's say like this, a support point, because price was already bullish, it will move to that was the first peak. Second peak, it will close above the second peak, then get more energy, that is support region, and bounce price to the next high. But because we're expecting a rejection at this point, that is why I marked this price, which is 103.940. okay, now come to weekly. If you look at weekly also, it's not all that convincing. Okay, just a moment. No, I really didn't mark it well. Okay, I didn't mark the, sorry, you don't have to mark, you have to mark up to the rejection price. Yeah, something like that. Okay, yeah, okay. And then if you come to weekly, you could see this, it's not even all that clear. Like when you're marking this, make sure you include the last week. That is the last week. Okay, the last week, I mean the tail of the candle, sorry for that. So now I've marked it. This is now, this price will either determine our resistance or our support. Now we come to weekly, sorry. Look at the weekly, what really happened in weekly. You see that when price reached this point, we had a nice rejection candle. Okay, what does that nice rejection candle represent? It represents that the sellers are strong in the market. Strong in the market. Okay, now that is what you've seen about the weekly. Now let's come to daily. Okay, daily, there is something so sweet that I want you to understand about daily. Okay, in daily, let me first show you my assumptions. Okay, I'm assuming CAD JPY will fall up to this point, here. You look at this point here, that's what I'm assuming CAD JPY will fall up to. Now I want you to look at this point. You could see that this is our higher high. So you could see the price was still bullish. Now let me draw you something. If you use divergence in price action, you have to also know how to use it very well. Look at that point. Okay, the difference of that high was not all that much. That's why I consider it so much. It was not all that much. That's why I consider it so much. I hope our price here moved a bit, so that I made a mistake, so that it won't affect us. It won't affect us. It was around there. Okay, so we are studying the daily time frame. Okay, you could see that in the daily time frame still we had a rejection candle at this point. This is where I exactly put my stop, my take profit, and we also had a railway track at this point. Okay, good, that was so cool. It was just a confirmation that, oh Miles, you can still ride on that trade. Okay, I can still ride on the trade. So what do I expect this price to do? Okay, price is still falling down. That is a must. Price is still falling down. Now let me show you something. Let's go to H4. Okay, H4. Now before I move on, I told you about one thing, guys. People have been asking me about what I drew, like what I drew, something like that triangle that you saw me drawing, almost something like that. Okay, now that triangle I cannot explain it here because it's long. Okay, it therefore means like when you're calculating round numbers to mean to minor highs. Okay, it helps you find a possible entry point. It helps you find a possible entry point, and that's why it was something like this, You could look at that. You could look at that very well. It helps you find entry points, like it rounds price entry points with different. When you see price has made like minor high highs or minor lower lows, that one can come in. Okay. Now I want you to look at one thing here. Okay. So if you look at here, this is, as you see in H4, even the same divergence price is still touching our higher highs, which like these high highs are not of big different ranges. Why have I drawn that diverging stuff? Is because of this minimum highs. Okay, minimum highs. Okay, I told you guys I won't be using my PC for right now because I have eye problems and I'm kind of fast recovering before I go straight to use my PC. Now let me show you something, guys. Okay, now here when you come here, we see about the market structure. Okay, in that higher high, you can see that this is our higher high, head and shoulder. Okay, then price had to move on. Now if you don't know how to use market structure, make sure you go and watch the videos about market structure. Now market structure, this is your higher high. Okay, this is another higher high, another higher high. Now I want you to do one thing. Okay, if you've marked your higher highs, okay, what is the most important point that should not be broken? The most important point that should not be broken is here. Okay, it's here. And if this is the most important price that should not be broken, if any candle closes above this point, then our structure was broken. Now since a candle closed below this, our structure was broken, and I already call this as lower low one. Now here, now if I found lower low one, I have to look for the last bullish candle, which is the order block. Now what is the last bullish candle, which is the order block? The last bullish candle, which is the order block, is this one here, is this green one. So what do? I draw the order block. How do you draw the order block? Make sure you include the top wick and exclude the bottom wick of a bullish order block. Okay, now this is how you draw it, this is how you draw it, this is how you draw it. I'm using the red price. Yes, that is how we draw it. Now you could see how price respected it. Lower low one. Okay, then a rejection, then lower low two. Okay, now we are in lower low two. What do we expect again? We expect a retracement, then lower low three. Okay, then when price reaches lower low three, we shall see what will happen now. I hope you've understood that. We shall see what will happen now. When price reaches lower low 3, we shall see what will happen. I hope you've understood the techniques here. We have, of course, our order block. Market structure is so clear, then price had to boom, up to down, boom, up to down. Now, if you see H1, I always enter my trade sometimes in H1 and H4. Now, if you see H1, it's the same thing, guys. You can see this. You can see the structure very well. Then lower low, okay, lower low. I hope you can see that. Lower low 1, lower low 2, but in H4 it was more way clear. Now guys, what do I expect you to do? When did we take the CAD JPY? We took CAD JPY, and CAD JPY is running at now 150 pips. We took CAD JPY, meaning if you're using 0.01 lot size, you would be eating $16 right now. So we took CAD JPY like on Monday, and just imagine this is Friday and this is where it has fallen up to. So what does price call onto? It calls for patience and be patient and stand with your price. Doesn't just move in a day. Okay, be patient, swing the whole week, hold a trade, and you will grow your account and you will make the money. Okay, don't forget that this video is sponsored by Xness. Of course, guys, if you need more of my help, check my WhatsApp in the description, and of course you can inbox me, guys. I think I'll wish you all the best for now. See you next time, guys. Bye.